Welcome to the latest Motley Fool scoreboard. I'm Anand Chakabaloo, and we've got longtime fools Dan Kaplinger and David Meyer giving a 1 to 10 rating to maybe the only public company with its own mafia. It's PayPal, ticker symbol PYPL. We'll do the business first, including factors like industry and competition. It's a very competitive space, financial services. A 10 is invincible. A 1 is hopeless. David's giving a 7. Dan's giving a 6. We'll start with that 6.
Yeah, and PayPal, old timers like me know PayPal. It was disruptive in its time by offering an alternative electronic payment source. It was originally tied to the rise of online auction sites like eBay. Eventually went on its own and broadened out. Now it offers a wide range of financial services, including exposure to cryptocurrencies. It's a good business. It was disruptive in its time, as I pointed out. Problem now is there's a whole bunch of other disruptors that in many ways have challenged what used to be its uniqueness and its response. It's been in some ways slow to respond and to use its first mover advantage to try to carve out a lasting competitive advantage. And that's why I give it a middling score of 6.
I think Dan sums it up very well. I think the thing to remember is PayPal is at a different stage in its life. I mean, it's bigger, it's more established, it's growing more slowly. Those aren't bad things. Those are just reality. And it needs to be run more for efficiency than growth. And to my pleasant surprise, and I will say, I was a little skeptical of who the CEO was going to be post Dan Schulman, who's a visionary. It's actually making that transition pretty well.
And we'll say, as Dan points out, that it's been, we remember it as, it's how you pay on eBay, but they also have Venmo, right? So that's a little more disruptive in the space. But let's move on to management that David was talking about. I expect extremely high scores given how flowery his praise was earlier. A management, a 10 is Warren Buffett, a 1 is Homer Simpson. Nope, it's just a 6 for both David and Dan. Wasn't quite as high as you would have expected. David, explain yourself.
Yeah, he's new. I mean, that's the
fair.
Driver there for the 6. He has as I said, he has a tough act to follow because Dan Schulman was a visionary and a builder. But I would have given CEO Alex Chriss a 5 simply because he hasn't been on the job for very long, but I think he deserves a 6. Like I said, he's managing this transition to more mature growth, more efficiency really well. I actually think there's still upside from here based on what the plans that he's laid out.
Yeah, I'd agree with that. Chris has been CEO for about a year now. Starting to see signs of a possible turnaround. I guess what I would have hoped to get from a new CEO is kind of more of a firm vision strategically of where exactly he sees PayPal moving forward. But I want to give the benefit of the doubt a little bit. That's why I'm comfortable with a 6 and not something, for a newcomer, that's actually a pretty good score before you go and prove yourself over the long term.
For financials, a 10 is a fortress, a 1 is yikes. You all also agree here with 7s. Dan, explain why it's a 7.
It's pretty simple. For all the ups and downs in the stock price, the underlying business has done reasonably well. Pretty consistent revenue performance, pretty consistent profit growth. Balance sheet is pretty solid. There's net debt, but it is at a manageable level. I don't see anything really wrong with the business financially. It just hasn't gotten the love from shareholders lately, that's for sure.
Yeah, I agree. The main thing is slower growth. And just to reiterate, slower growth is not necessarily bad. It's what you do with that growth that becomes important from here. And I agree. Profitability is good. Cash flow is good. Capital allocation has a nice balance of investing for some growth and returning capital to shareholders via share repurchases. So when you balance all those things out, I think that Alex Chriss is doing the right things for where PayPal is in its life.
Let's move on to valuation, Dan, including the big question. How well will PayPal stock do over the next 5 years? And how safe is it? 10 is a sure thing, 1's a lottery ticket.
I'm giving PayPal a 5 to 10% average annual return over the next 5 years. I think it's going to end up towards the upper end of that range just because the stock is still, even though it's rebounded somewhat over the past few months or so. Still down substantially from its all-time highs. I think there's further room to rebound. I gave it a safety score of a 6. I'm just not sure that we're ever going to get back to the levels of growth that we saw previously. And as David points out, that doesn't have to be a bad thing. The question is whether most shareholders have acknowledged that fact, or if they still are clinging to this idea that PayPal can somehow renovate and accelerate its growth. I don't think the acceleration happens, but I think it's a pretty safe stock just because it's already seen such a big stock price decline and the financials are solid.
I also gave it 5 to 10% annual return rating, but I bumped up my safety score a bit more to 7. With the recent run up in the stock price, it's hard to see much more than historic market type returns. Let's call it 8% a year or so. But I think the company has some very, very good franchises that will continue to serve customers and shareholders well.
One of everyone's favorite, David. It's Top It. Is there a company in PayPal space you like more?
Man, I will say of all the times you've asked me this one was really difficult, and the only one I might go with is Adyen. Again, they're very similar in what they do, but Adyen has much larger, much wider global presence. So maybe Adyen.
I think I've got the same sentiment as far as I see most fintechs as essentially fungible. The services that they offer, not much to distinguish one company from another. The only real moat is once you get a network effect, you're going to go with the service your friends use. And so if your friends start using a different service, you're going to follow them. And I just don't think, a lot of companies have given out a lot of money for customer acquisition purposes. That's great for the consumer. I don't see how it supports long-term profits. In many ways, I kind of see PayPal as an object lesson that other fintechs should think about as they pursue some of these expensive customer acquisition tactics. Is it really going to pay off in the long run? I think you have to have a good answer to that question.
So not only did Dan not top it, he says PayPal. I don't know about that one. Kind of just forget the space is what he's saying. Thanks to both Dan and to David. They've given PayPal an overall score of 6.2 out of 10, which is maybe a little lower than I thought, it would be with a company that's this well established. And as Dan was talking about, that network effect. But neither Dan nor David expects huge returns from here for PayPal. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Instacart, also sometimes called Maple Bear. Till then, Fool on. What you guys didn't hear is I fell off the rails at the end. I didn't finish.